We're officially in a trade war, back and forth, tariffs here, tariffs that. Welcome to the channel, everybody. I want to ease you today as much as possible to give you some value on what's actually going on. If this is your first video watching with me, go back and check some of the videos out previously as we begin not only market updates, but also trade ideas for the next day. So if you do want to make money while this market's coming down, or you want to protect your gains and really understand, man, where do I buy this dip? Is it now? How much more is it going to dip? If you want to answer those questions, please make sure to hit that like button, subscribe button, and turn on those notifications. If you've been enjoying my videos thus far, if you have any constructive criticism, please let me know down below in the comments. Always trying to improve here to better give valued content. All right. So without further ado, thank y'all so much. I appreciate you. My name is Dr. B. If you're not familiar, I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. I've been a full-time entrepreneur for the past 8 years, have been trading actively in the markets for the last 6 going on 7 years. Have traded during 2018, during the first Trump tariffs in 2022, a bear market, and that flash crash we had in 2020, picking up that dip. So a little bit familiar with how to trade bear markets and trend changes. And maybe this is a lot of beginners that are coming in. It's like, man, I've heard about this stock market. I want to learn. If you're advanced or intermediate, I will speed through these updates just to make sure everyone's inclusive. So stay tuned and we'll get right to the value right now. All right. As always, we love the charts. We love the charts. That's where the money's made. That may be your struggle right now, as I just don't know the charts, Brian. I'm still confused. I don't understand. Please, 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 please continue listening. And today, what I want to do as a little educational bonus is I want to give an idea of how you would execute on a trade, right? A trade versus long-term investing. So how you would execute on a trade, and also where you would dollar cost average or buy some dips, how that would go about. So I'm gonna use Robinhood more specifically because I know people start on Robinhood a lot, and you're just like, I don't know what to enter. I don't know how to enter. I'm getting that your things are playing out, but where do I start? How do I follow along? All right. So let's jump into the fundamental news. Okay. What's actually happening, and go straight into it. All right. So we see here that Trump today, I'll just give you a summary as I'm pulling this up. Okay. There's a trade war going between China and the United States. And I don't have to pull this up necessarily, but what's happening, for those that don't know or haven't been keeping up, is that we know that Trump initiated those first tariffs. Okay. He initiated those first tariffs, came out and said, hey, we need to start taxing. We need to bring American companies back into America. We need to keep our business in America. And those that want to do business outside, you're going to be taxed, and vice versa. If you want to do business with the U.S., you're going to be taxed importing and exporting goods back and forth between countries and continents. Okay. So with that being said, these reciprocal tariffs are now coming out. So imagine if I'm talking to you right now and it's like, hey, you're going to charge me X amount to do business with you. And then I'm like, oh, well, if you're going to charge me that much, I'm going to charge you this much. So that's essentially in a third grade level. What's happening right now is you're having this bickering back and forth, quote unquote, all right, about who is going to charge these tariffs and who wants to initiate power and say, hey, cool, we're not scared of you. All right, that's fine. Right. So what Trump, in my opinion, is trying to do is he's trying to make America great again. I'm putting that on quotes only because there's a lot of listeners that have viewpoints politically. I'm not here to talk about the political nature. I'm just saying he's trying to strong arm to essentially hold true to that statement. Make America great again, which means bring all companies back into America. You want to do business with us? Cool. It's going to cost you. But China, more specifically here, is like, we're not scared of you. We'll charge you. We know you need us because most of your companies are doing business importing China goods to make apparel, have furniture, whatever you want to sell in the US. So they're like, oh, well, we'll charge you more. So then Trump comes out and said, all right, you want to play that game? I'm going to charge you more. So that does not make investors, and more specifically, long-term investors, very confident if there's this trade war back and forth because, you know, I don't know which way it's going, right? So that is what is essentially happening. And it's also costing big businesses, primarily some of the big tech companies that do business in China, right? Specifically Apple, more specifically. We do have some chip sectors that are shrinking as well, but they could be exempt and could have some type of exemptions, not certain just yet. We do have retailers as well, such as Nike, right, that does big business over in China. So for those that are not too aware, there's a little catch up for you about what's essentially going on and why the market continues on the downside. So when, again, as you hear people say, pick up the dip, pick up the dip, pick up the dip. Well, this is a little bit different situation. You can continue to pick up the dip because over the long term, 5 years, 10 years, yeah, we'll be back up. But in the short term, we have to bear through this, all puns intended, bear through this bear market that we can have lower, and you need to strategically come your way, trade your way down, and also protect your way down and buy more on the way down. All right. So let's jump into the charts now. And before I do that, while we're on this screen, this is my Discord. This is Leverage University, as you can see. All right. This is my holistic life, business, entrepreneurs, professionals that are learning various different skill sets of how to essentially make themselves as a brand. All right. You want to start a business. You want to have side hustles. You want to generate money. You want to be better personally. You want to have better communication skills. You want to start a podcast, whatever it is. This is the group for you. And we call ourselves thought leaders. Thought leaders. We build thought leaders is our mantra here. All right. So we have our trading floor. We have our crypto hub. And what we're doing on our trading floor is I have long-term shares and leaps sections for our group. So if you're not in the trading space or it's too fast for you, if it's just like, Brian, I cannot do that. Maybe your question is, man, I really want to buy some shares. I really want to get involved in the stock market. I have a little bit of extra money, but I just am a little uncertain. I don't know where it's going. That is what we're here for, is to chart out and give levels of where the market's going. And we can give you ideas on where those buy levels are. Okay. So you're just not going based off of emotion. If it's trading wise, where you're generating money that goes into your bank account, want to shout out some wins from our community here. You can see our wins channel. Dreama, awesome job. She just joined a month ago, has been a long-term investor, but just getting into trading. 50% on Palantir while traveling. She was driving, took our trade idea today safely. All right. And made 50% of our money. Okay. There's my 90% on AMD. On the downside, it went close to 600% today. So I did take out a little bit earlier, kept a little bit of a runner in, but 100% on your money, you do the math. You put $100 in, you just made $100. You put $1,000 in, you made $1,000. Okay. You put 2,000, you do the math. So you do not need a lot of money to trade with. You just need to understand how the skill set works. All right. So all of our signals were green today. Palantir puts, AMD puts, Apple puts, and you can see here why that was when I put in the day trade signals channel. All right. So the way I personally do my signals, or ideas, as I like to call them, is I give the stock or the index that we're trading. So watching Palantir 85.86 on the chart. Okay. 85.86. Watching for puts. So I give the idea, puts meaning we're making money coming down. Right. I'm looking at the 80 put or the 82 or 83 put for the expiration 411. Larger accounts can look at next week puts. Okay. And we gave the idea, we entered right here, and I want to show you exactly what that looked like when it started working out. There's Palantir, an update, and Palantir is all the way down at 76. So we entered here, and you see that red candle, we're coming down, and all of that is money. Okay. Same thing on AMD. Right. Gave the timestamp, gave exact contract to enter, told where to take profit. AMD was at $89. By the end of the day, it was at 77. And here's how it looked coming down. Okay. So there's proof right there that it's not only formulating the idea, but it's showing from entry, literally telling people where to enter, right? What the risk is, which my trades personally do not have a lot of drawdown. So that means you're not going to be in a lot of negative when entering the trades that I like to personally take. I like to have very, very tight entries, which means very little red and immediate green. All right. So just want to show you that there of how those trades worked out. Beautiful trades. It wasn't just guessing. There was a trade idea. There was a plan, and we executed on that plan. All right. So let's get some ideas of what happened today and where we're going, because we're still quote unquote tanking. We're still pulling back. Let's use a word here. All right. So a less intimidating word, I guess, for some people. All right. So if you watch my video from yesterday, exactly what happened. Okay. Now, am I perfect? No, but that's the benefit of understanding the charts as to the price action, meaning how the candles and the prices are moving. Okay. And what idea can formulate. So we said yesterday that we're on a downtrend. Okay. So most people are used to trading that stocks only go up. Okay. Take off this confusion here. Stocks only go up. So here's 2024. Oh man, stocks are going up. Stocks are going up. So now that the trend has changed, everyone is saying the same thing. Oh man, here's the bottom. Oh man, here's the bottom. Oh man, here's the bottom. It can't go any lower. The trend has changed, folks. So every pop that you see, just like here, okay, every drop got bought. Every drop got bought. We're forming higher highs, higher highs, higher lows, higher lows, higher lows. But now we're forming lower highs, lower lows, lower lows. And even if we pop, like I keep saying, even if we pop back up into here, that can still form a lower high on this trend. Okay. So like I keep telling folks that are watching me consistently, right? Pick up the dips, leave some room to continuously add until, if you're watching me or watching various other thought leaders in this space, okay, until we have a confirmed bottom, which you'll see across the board from probably a lot of traders and investors say, hey, we see bottom signals. Hey, we see higher lows forming for consecutive weeks or maybe the next month. Then we can start trading it back to the upside, right? Then we can confirm that we're coming all the way back up. But until then, right, we have potentially much lower to go. Okay. So I'll give some levels here on the SPY, the S&P 500 ETF. All right. So let me show you something where I personally think a true bottom would really come in. Okay. So let's drag this Fibonacci retracement tool. Okay. Fibonacci retracement tool. So this shows from the 2023 pullback, that low right there, where we started this continuous uptrend on a daily chart. Buyers typically like to step in at the 38.2. Okay, so that is a level that typically is very, very strong right there. That 38.2, you can see that we rejected underneath that 530 on SPY. So it headed right to that 481, that 61.8. Okay. So if we break through that 481.52, then the next level, roughly speaking, is 450. So that's what a lot of investors and traders are looking at, is if we clear another low, there's probably nothing but room down into there. Okay. So I know a lot of you may be getting excited. It's like, man, Brian, if you're saying this, everything's happened correctly thus far, does that mean we just enter puts right here? Yes and no. Okay. So once you formulate the idea, okay, and this goes into my promise from the beginning of the video, how to formulate idea to the trade that you enter, the trade plan, to the actual entering and execution. Okay. So if we see it going to 450, my long-term investors will say, okay, I need to plan on it coming down into this 450. Okay. Well, Brian, can it retrace the whole move? Yeah, it could. It could. We could have bound into 400 again on the S&P 500 SPY. Okay. So this type of move can happen where we give up all of 2024's gains and into the 2023 gains as well. Okay. So this Fibonacci retracement tool here can show that as we're trending downwards, what levels that we are getting halted or breaking through, and we're sitting right at this 61.8 at 481.52. Okay. So that's a daily. There's a bigger time frame for you to see the drasticness of the downside. If we break through this just say a round number, if we're underneath 480, just expect some lower levels to come in for, I like to go by fives then personally, because we're getting super overextended. So we break underneath 480, look for 475. Okay. if we break underneath 480. But as long as we hold this 481 to 485, we can retrace back up. So now what I'm going to do is I'm going to go into an hourly time frame. I'm going to zoom in a little bit and you'll see a different outlook. So I'm going to keep this Fibonacci level here. And you can see here on this hourly candle, we had somewhat of buyers step back in a little bit to end the day right here. So this used to be a solid red candle, and this tells us that buyers step back in. All right. Or it had a failure to go lower. So that tells me that anytime I see long top wicks, that is a little bit more selling pressure. Long bottom wicks tells us that buyers are stepping in or there's failures to go lower. Okay. So what does this sign indicate? Well, Brian, you said it could go all the way down to 450. Yeah, but by when? Just like today happened, I said it would pop up, then potentially come back down. Well, what if we have the same idea? What if we rip back up into this 530, start to fill some of this gap here at 530 and into 535? Then that would be another major lower high reject where we could begin to come back down again, even more massively. Okay. So I like to draw candles like this because it helps a lot of newbies and maybe, experienced or intermediate visualize what can happen. So remember me drawing that yesterday. Okay. So this could happen. So you got to be prepared that if I want to take it lower, I need to have two ideas. So if you want to see lower, it needs to clear this previous day low, 481.50 or below 480. Or I need to wait for it to pop and formulate some type of lower high, okay, at 530 or 535, and then take that reject right back down. Okay. So those are the ideas to take it lower. So Brian, I only want to play puts. I want to continue the downside. I want to trade the downside. Okay. All right. So that's how that would look. So Brian, what does that look like? Like, how would I go from this and I get it, but then what do I do when I'm ready to enter? Okay. So I'll go ahead and transition into that idea. So if I see a pop up into this 530 and 535 area like this, and I want to take it down, I'll miss and wait all of this move. So I'll just let it push. I'll let it push. I'll let it push. I'll let it push. And what you'll start seeing, and this is why I reference the chart so much, is you'll start seeing a little bit of exhaustion. So here's today. We popped up, the market opened up here, and it started to get a little bit exhausted here at this 525, which was a little bit of resistance. You can see there, 525 came down, 523 came down. So in this zone, I don't want to trade or consider calls ideally to squeeze because it has already made a big move from here. Okay. So as it's formulating this, it's formulating lower highs, as you see there. So as I see this, I may want to consider some puts, enter right here with a stop loss above 525 and take it down through this big gap, which like to get filled. And you see that gap got filled. All right. So just say that we formulate the idea on SPY. Okay. Now, pause really quick. If you're still confused and don't understand, please make sure you join Leverage University or book a one-on-one consult with me or join our next trading boot camp for 3 days, which is typically the first week in a new month. So our next one is going to be May 6th through the 8th. Go ahead and sign up there. Okay. I would love to have you inside. A lot of our clients inside of Leverage University start fresh, new. They're beginners. They may have traded before or something, but they just don't have it down yet. And I teach all these strategies inside that boot camp, as well as if you just join our Discord, we have a university section. Okay. University section here where I have trading trainings and trade reviews where I go over exactly what to do all the way up to how to start navigating on Robinhood, introductions to options trading. All of these trainings are inside of our Discord platform for a monthly fee, or you can pay throughout the year. All right. So just wanted to go there before we get into the weeds. All right. We pop up. So I'll use Robinhood, for example. So here's Robinhood Legend. You're like, what the heck is this? Many of you came from my Robinhood Legend video. So I highly recommend. This is essentially their desktop platform. It's a lot better. Or if you just had the phone on you, that's perfectly fine, right? You have to get approved for options trading, okay? And I would want to go to SPY. So I've already charted it, right? So I'm on SPY. See, the chart looks the same. So when I say, or I consider where to enter puts, right? Remember the chart looks the same here. I'll draw a horizontal line so you can see it. So if SPY pops up to this 530, all the way up here again, or 535, right there in this zone, if I see it push up into there, most people would think, oh, calls, it's green. It's already made a big move. People that are in calls, meaning going up, people that are in calls are about to take their profits. Just like here, people that were in calls take their profits, we sell back off. So if we pop back up into there again in this range at the top, just look left what happened last time. So if it pops up in this 530, 535, that is the best idea, in my opinion, to short it again, okay, with puts. So it looks something like this, right back down, all right? So if I see that, what I'm going to do in our community is I'm going to signal or tell my community, hey, let's go and look at some of the put contracts. So you see these contracts down here. This is Friday's contract. So I would go down. They're kind of pricey right now, in my opinion. So let's go into how many strikes. Let's choose more. Now we'll go to the ask price. And I'd probably go to 480s, 480 is probably what I would look at. But you see they're $800. So they're getting very, very pricey right now. But it will be cheaper in the morning if it's all the way up here. So that's what I would look at if I were to trade SPY and it were to be all the way up here at 530. I'd probably look at the 500 puts or the 510 puts if it were all the way up here. Okay, so it pushes up. If I see it at 530, 535 in this zone, I'd look for puts and I'd select, most likely, this is just example, okay? If it works out for you and you're not in our group, that's perfectly fine. But just as example, this is how I signal things or I take my trades. If I see it up here, I'd start looking at 520, maybe even 500 contracts for puts. So I'd go into the strike price, puts, and select the ask price, click it, and swipe up and enter. All right. So that's how you go from trade idea to the next day if you see some things you were to enter. All right. So that's what I did on AMD today. So let me type in AMD. All right. So I saw it pop up into this level here. I looked left and I saw some resistance. All right. So I saw some resistance here on AMD at 89, couldn't get back up above 90. So I signaled, you saw earlier that I signaled the 87 puts. Okay. 87 puts, meaning I wanted to come down and make money. So just for reference, that 87 put that I signaled this morning, look down here, this 87 put this morning. I got to go into more, geez. Got 30 to get it to show. This 87 put was $180. Did you have $180 this morning? That $180 went to $900. So you pay $180, you sell it at $900. Did that cover your day's work? $700-800 profit, and you only spent $180. Well, Brian, I could have lost $180. No, that's why we have risk management. So we're not going to allow the $180 to go down more than 15, 20%. So you're not risking 180, you're risking $36. So let me ask you this. Are you willing to risk $36 to make 900? Well, of course. That's trading. That's the skill set that folks are dismissing. Now, where do people go wrong? Well, Brian, I've heard people lose money in trading and stuff. Typically is they're not trusting the charts, or they go too heavy in the position and they don't respect their stop losses. So someone thinks they can make a bunch of money and they put in 2, 3, 4,000. And then they're just like, I'll see what happens. And then it just goes the wrong direction and they don't pay attention to it. So what I'm teaching my community as best as possible is, hey, let's enter the trade properly, right? Puts down, we're in the green. Let's take our profits and leave some in all the way down. And you can generate $400, $500, $600 with very low risk. Now, does this happen every day? No, but it can. It's happening majority of the time. And I'm sharing it on my stories. I'm sharing to my group. I'm showing trades that are winning. We show trade losses as well, but they're very, very minimal, if at all. Okay. And if someone does take a loss, I always respect and tell someone, hey, did you stop out? Hey, did you stop? Right? See, I took a small loss on Amazon at the end of March. Right? So there you go. It's very, very small. Cool. All right, let's get back to it. So there's a little mini education in the middle of that, how you would go from trade idea to entering into that potential put. Okay. Now, why would you enter puts, Brian, if the market it has the potential to bounce or go up? It's because I'm trading in the trend and the direction that the market is in right now. So since the market is forming lower highs, lower highs, lower highs, every pop is getting shorted. So that means I don't really want to chase calls back up. I'll just wait for a big green candle. And then as far as it goes up and far as it goes up, most likely it's probably going to get shorted for right now, because we have not changed a significant trend just yet. We need to see a confident trend change, right? Over, in my opinion, a couple of weeks right now, because every pop shorted. What if we pop again tomorrow? Potential short again. All right. So that is what's happening right now. All right. So there's our education. Let me jump through some levels of some different stocks. So hopefully that helped out. Let me know down below if it did. I'll make a separate training video, an educational video here on the channel. But that is your educational tip from going to trade idea to execution and how we're generating money, and also again example of how much money you can generate with a small amount. Okay. There were bigger trades out there today too, like SPY, thousands of dollars. This was a 4-figure day plus. Easy. That means $1,000 plus if you can't do no math. Okay. All right. So on SPY, what I'll be looking at is that lower end of the range, 481.52. I'll also be looking at 520 as well, because that was a level that we broke below and rejected today. So I'll be watching that 520 level as high as possible. If we pop up into there, I can short it. That would be a lower high. So I'm giving a big level here like I did earlier. But if we pop up into that 520, right? Like, Brian, you said it was going to go all the way up to 530, 535. That's why we have multiple trade ideas, right? So if it pops up into there, I'll look at shorting this like that, okay? Because it may get exhausted right here instead of all the way up here, okay? Well, Brian, what if it doesn't get back up to there? What if it only pops to like 506, 505? There's another rejection point. You see those top wicks right there, right there, right there. So pretty much underneath 510. Okay, so I'd want to mark that level. So this is what I do in the evenings, and what I recommend all my clients or anyone in our community do is chart out how the day went and where some rejections or bounces were in the market. Rejections off the ceiling, went up, reject, went up, reject. What if it pops up into that 509 again and it rejects off of there? Well, I'll take a reject off of that level. Okay. So I've got 3 rejection levels that I would like. Here's okay. Here's pretty decent. Here I would love. Okay. A little bit higher, even bigger downside potential. All right. So I love pops and fades. Okay. That's what I ultimately want to do in this market right now is give me a gap up again. Give me a pop up overnight again. The harder trade, in my opinion, is break below new lows. So Brian, what if it doesn't pop and we just fall underneath this low? Well, I'm going to be a little bit more cautious just because that could easily fake someone out and rip right back up. So I don't really like to chase puts when it's pushing down. I need to wait a little bit more to see where it pops back up into, because this is technically a dip buy. All right. So I like to wait, and I tell my clients and community members as well, if I see it pushing down into new lows, I'm going to be a little bit more patient. If it pops, I can be a little bit more aggressive because I can see where the resistance is. All right. I want to consider puts off resistance. I want to consider calls off of support. All right. Cool. So you got our support levels that we want to watch. We got our resistance levels that we want to watch, and we trade off of those levels. Very wide ranges. Keep your stops tight. Be patient a little bit more. So I've been showing up to the market a little bit more lax in the morning, waiting for the proper trade, giving it 15, 20, 30 minutes sometimes to let the market settle a little bit and get a direction. I used to trade off open very aggressively, but I'm letting the market settle a little bit more. All right. Let's go through QQQ. Pretty much the same chart here. The level you want to watch on QQQ. If I zoom out, okay, QQQ is already in a bear market. All right. So let's go from the 2023 retracement here. And you see there, we're below that 61.8. So QQQ potentially, if it breaks and holds below 416 here, okay, below 416 and also below these previous lows, I want to mark that as like a little yellow pivot point. Okay, 422, then we're going to remain weak and we could flip and take out the new low, which would be below 400. If we break below 400, we can get aggressive down into targeting this 380 level. Okay, that 380 level. So watch 400 as a support for right now. Okay, watch for a pop a little bit higher back into these highs, that 440 and that 430 level. That was a nice rejection today. 430s. I want to mark that. Okay, right there. So I'm looking for either pop back up into that 430, okay, or a pop higher back up into the 440s. And then I want to watch what it does up in this 440 area. If I see strength, then I'll probably wait a little bit longer because we could get a squeeze back up into there. And then I can consider what it does up here and take it right back down. Okay. So we need some good news to come in to squeeze us back up. Please be mindful that that can happen. I've still got my head on a swivel, so I will be very nimble and aware that, hey, Brian, you said puts and the market's ripping. Yeah, you got to be able to adjust intraday depending on what begins to happen. Okay, so if I see a pop, I'm going to wait to see how it reacts. Very similar to here. Pop, fake news, right back down. Pop, nope, tariffs, right back down. What happens if we pop again? We could break through this time. So I want to be mindful that we're going a little bit higher each time, and I want to give it some room to get up higher if possible. All right. Now, if you're a call trader, if you like calls, that's perfectly fine. Just let it clear or take the momentum. So if we clear above 430 again, we can push up another $10 up in that 440 again. So if you're more of a call, and I'm mentioning upside levels for my rejections for puts, you can consider calls back up if you'd like. All right. But just be mindful, the market still is weak. So you got to be trimming your profits a little bit quicker, maybe on the call side, because you never know, it could get easily rejected right back down. Okay. IWM significantly weak here. Again, I told my community and telling you guys as well that the big support, again, that I'm looking for on IWM is taking it all the way down here into 160s, 163. right here. That's where the market essentially wants it to go. Okay. So if we do a daily retracement again, and you can see there's a little bit of gap right there as well. So IWM looking really, really good to fill that gap down into that 160, 162 level. All right. So it's at 172 right now. Right. One more pop if you can get it. A little bit of a lower high underneath 180 would be your level. Nice psych level there. You can see what it did here. Rejected 179 towards the end of the day right there. Break underneath. What if it pops into it again one more time? Maybe you get 177, 179. Right. And then if it squeezes, give it up to like 183, something like that. Right. So IWM, you know, the bottom end of the range, the bottom end of the level that it wants to go to. So there's a little bit of an indication of lower highs right here, right here, right here. All right. So if it pops one more time, could short like that. Okay. So be mindful. I do think IWM can recover, but I would not touch IWM personally until it gets down into this 160 level for calls. All right. There's your indication with those gaps right there. So any pops, look for shorting IWM back into this 160 level. All right. Oh, Apple. Apple's very concerning here because they are very significantly affected by the tariffs. So what I noticed on Apple today, which was very key, is I wanted to watch this weekly 200 moving average here, this orange moving average. You see, every time we get below a moving average and we fail below, we get more aggressive. Bear flag, more aggressive. Underneath this one, that was our 100, more aggressive. And now we're underneath this one, which is 175. So does that mean Apple has another leg down? Potentially. That means Apple has the potential to come down and be gone, just like it was last time, down into 150 level, the 150 zone. Okay, like that. Where are you getting that level from? Previous resistances turn support right in this confluence area right here where there's buyers and sellers right at that 150. So if the market continues to sell, I do believe Apple is going to get even more weak if it remains underneath that 175 and 178 level. Okay. So any pop back up into 180 potentially on Apple, I want to watch for a rejection on that potentially. Very similar to pop up here. And then if it fails and starts to get weak again, there's your signal for it to come lower. All right. So again, on Apple, don't try to time the bottom just yet. It may have a little bit lower, but if you want to pick up some Apple shares, great. Right. In the long term, will Apple be back up at 260, 270, 300? Yeah, I do believe so. But right now, Apple is going to be affected heavily by these tariffs because we know they do a lot of business with China. A lot of China iPhone sales are very prominent. So can Apple come all the way down here into this support down at the 130 level? So let's go back to the 2022 lows on this weekly time frame and drag that up. Right? You see that Apple's below that 61.8 retracement, right into that 153 and then into the 124. So those will be my buy zones if you're looking to buy Apple long term. Is you can buy right here in this zone, which some of you did, maybe 170. And then you got to be prepared to buy at 150. And then even if we tank or crash, you got to be prepared to buy closer to that 125 level. All right. Now let's drag it to this daily here, like we did previously on Apple, which would be right there. You can see there's some gaps to fill as well. These light gray areas as well, 156 down to 145. So this one, let's pull back in 2024. Where's that 2023 pullback? Right there that we've been doing. Yeah, same levels. So you can see that we're breaking below that 61.8%. That is very, very key, very concerning in a for some folks that it can come a lot lower. All right. So be prepared for lower on Apple. There's your levels. Tesla, I'll see y'all at, in my opinion, 150, below 200. I'll see Tesla below 200. Been talking about that for over a year. Do not chase this Tesla pump. It is going to be faked out by a clean bear flag here. It is just absolutely beautiful. It is high risk trading it because the contract's very volatile and we never know what Elon's going to say or whatnot. But clean bear flag right there, in my opinion. And this could make a measured move down into there, just like that. All right. So I still got below 200 for a buying zone. If you're a Tesla bull, please be mindful and patient that this is a bear flag right now. It is below all the moving averages. This is a death cross, okay, on a moving average, another death cross right here, all right? And that just simply means that there's selling pressure coming down. You see those moving averages, those crosses, all right? And it is still selling pressure coming down potentially into that 150 and ultimately just below 200. All right. So watch out for Tesla lower. Looking at 180 in the immediate short term. All right, Palantir. I've been formulating this idea on Palantir. A lot of people have questions on Palantir because it was one of the most bullish stocks, one of the most anticipated of 2024 and the end of 2023, and it made a massive bullish run. But again, what must go up must come down. Okay, and the faster they go up, sometimes the faster they come down, or it's a slow grind down. All right, so please be mindful that Palantir is starting to show some top wick rejections off of this first moving average. What did we say about the moving averages? It gets back underneath this moving average on a weekly time frame, which is the 20 moving average here. And it's also underneath rejecting right at the daily 20. And it has the potential to head down right to around 57 or 60. So that's your low end of the range. So my long-term investors, again, this is how I'm getting my long-term buy zones. Where's Palantir going to? Where should I pick up Palantir? Be prepared for 50 and 60. Okay. If the market gets a little bit more drastic, be prepared for 30 and 40. You don't believe me? There's AMD. Quick move up, staircase down. Oh, there's the bottom. Oh, there's the bottom. Oh, there's the bottom. It's below all these different moving averages here. Death cross underneath it, below all the moving averages on a daily, right? Where did it start getting underneath that 20 moving average that we just saw on Palantir? Rejecting right here, right? Start getting underneath that 20 moving average, this light blue right here. Do you see that? Start getting underneath it, underneath it, underneath it, underneath it. What is Palantir doing? It's underneath it, rejecting right on it, headed down to the next one. Okay, if it gets underneath there, we're coming back down into the 30s. Okay, so please be mindful. If you want to hold Palantir and you're like, dang, like I've got a low cost average, I've got in the teens. All right, let it fall all the way back down to $30, $40 and pick up the dip. Okay, dollar cost average on your way down. Put it on recurring buy $5 a day of Palantir, just on the way down. Just keep buying if you don't want to time the bottom. But my load up zones would be 50 to 55. And then load up zone again would be close to $35 and $40. Very similar to Coinbase. Told folks to wait on Coinbase as it got below this moving average right here. We're starting to reject underneath this 20. Do you see that death cross right there? Underneath that 20 moving average, right underneath 288, and just never reclaimed underneath that daily 20 and continuing on the way down back into the low 100s. So yes, you can like have a lackadaisical way of trading and investing. But if you see, and maybe it's not just me, but it's other folks that you follow, if you see how we're analyzing these charts where the money's made, we can know exactly and have a peace of mind of what's going to be projected to happen, right? Well, how did y'all know it was going to be a recession this year? No one knows that. Well, actually, we have clues. Look at this relative strength index, our RSI. Okay. I want you to look at what the RSI correlated to when the market tanked and pulled back. Here's 2001. Where's the RSI on a monthly? Overbought. So here's the chart. Here's the RSI. Too many cooks in the kitchen, comes tumbling down. There's 2001. There's 2008. Oh, what happened to be the housing market crisis? Okay, cool. That's just the RSI. It needs to cool off. All right. Well, here is the first kind of stumbling block into Trump's first presidency here at the end of Obama's term, right here. Okay. And then here are the tariffs, the first tariffs, pullback, RSI overextended. Oh, there's 2020. RSI was just overextended. Oh, there was a 2022 bear market. Oh, the RSI just overextended. Well, now look what's happening. Same thing. Do you see how I don't even need to know what's in the news? I was telling my community last year, hey, recession's coming in 2025. Be prepared for 2026, maybe end of 2025. It's going to happen inevitably because of these technical indicators on the charts that are repeating patterns over and over and over. All right. So I love each and every one of you. Thank you so much, whether I know you, don't know you, all those good things. Hopefully this video was a little bit more educational on the side, because as I'm giving these updates and things continuously happen, it's like, man, I still don't know how to do it. Make sure you join the Discord. I'll see you in the morning. For those that join tonight, you can see what actually happens inside. For those that want to learn, hey, join our boot camp coming up. If you need some consult, want one-on-one mentorship in business, life, personal development, along with this trading skill set, we'd love to have a conversation with you. Until next time, I will see you all tomorrow in the Discord and on the charts, and I'll see you in the next video for those that are on our YouTube. Peace, love, and blessings. Talk to y'all soon.